So I'm saying that kama inawezekana wakuulize tena the factors that affect the value of call option. Hiyo nikiona nitacheka tu. Alafu sasa kuja hapa uniandikie swap. That is the second. So tumemalizana na forward, tumemalizana na money market, tukamalizana na options. This one is now swap. Sasa swap. Na hii option ndio inaitwa currency option. So akikuuliza currency option, please don't be surprised. Just same thing. So let's look at swap. Swap is number 4. I want to say that a swap is a financial arrangement. Ni kama ku-exchange tu. Nakumbuka kama kitambo. Like today I was talking to a friend of mine and ananiambia ako home na watu bado wanaenda kwa ile kisiagi. Hiyo kisiagi wakienda wanaenda na mayai. Mna swap. Anasaidiwa, then anapeana mayai. It still happens in some areas. Like I just called today and I was being told, nikacheka. Was that something that we did sometimes back 90s, late 90s? So I was surprised. Just the same way people swap. And you can do what is called currency swap. So what you do, you can exchange with somebody money and you agree that atarudisha, na wewe pia utarudisha sometimes. You want Kenya shillings, instead of exchanging Kenya shillings, na agree na yeye, unaenda Kenya, I have some Kenya shillings. Go with it, utumie. Wakati utarudi huku, take your dollar, I take my Kenya shillings. So it is basically swap. So it is a financial arrangement between parties to exchange certain benefits. It is a financial arrangement between parties to exchange certain benefits. It is a financial arrangement between parties to exchange certain benefits. Assets and liabilities for mutual benefit. They can change assets and liabilities for mutual benefits. A swap is a financial arrangement between parties to exchange certain benefits. Assets and liabilities for mutual benefit. Hiyo walileta last year. I think ilikuwa last year. Kuna mwanafunzi aliniambia, mwalimu nimeona kitu. Nikamuuliza inaitwa nini? Ati plain vanilla. Na nilimpea kwa nini? Niliwapea hiyo. Akasema hajaiona. Iko visiting. So, what does that mean? Even that same question ya December 2023. Hiyo December 2023. Kuna question hapa wamuuliza, question number 4. Roman 5. Distinguish between currency option and currency swap. Na ile plain vanilla walileta wapi? Utaona tu. So, these things they do come in exams. Na sasa hiyo ukitetemeka kidogo unasema hujaiona, hujaisikia. So we say that a swap is a financial arrangement between parties to exchange certain benefits, assets and liabilities for mutual benefits. Types of swap. The first type of swap is called interest rate or plain vanilla. Interest rate or plain vanilla. Types of swap. First one is called interest rate. So plain vanilla. Please. It's called plain vanilla. Plain vanilla. So I want to say that, explain and say that when investors can borrow the same currency at different rates, when investors can borrow the same currency at different rates, Investors can borrow on behalf of each other. Umeelewana? When investors can borrow the same currency at different rates, the investors can borrow on behalf of each other. So what does that mean, Sadia? What we are saying is that you might find that there is discrimination in countries or banks offer different rates. So let's say that I'm working in bank A. I can go and borrow 1 million in bank A at the rate of, let's say, 10%. My friend akikuja on that bank A, yeah, atapewa na 20%. Because maybe they have done assessment and they think that my friend is very risky, is that a risky client. So interest rate yake imeenda juu. So all of us are borrowing Kenya shillings from the same bank, but at a different rate. Lakini, akienda kwa sacco or somewhere else, anaweza pata at a totally different rate. So we can agree with this person that why can't we exchange? Let me borrow on your behalf and give you. So it is what we are trying to escape here is the interest rate difference. So we are saying that if this person can give me at this rate, lakini wewe unaweza lipa at this rate, then why can't we swap? Let me get a good example. Let's say that I am in a place called Homa Bay County. There are not much bank in that area. So let's say that we only have maybe KCB in Homa Bay, just an example. So Sadia, if Sadia goes to KCB, she's not in Homa Bay, mimi niko Homa Bay, but Sadia is in Mombasa. Akienda KCB Mombasa, atapewa at a good rate. Loan at a good rate. But mimi nikienda nitapewa at a high rate. The same way there is Diamond Trust Bank in Homa Bay, but not in Mombasa. Or maybe it is in Mombasa. If Sadia goes Diamond Trust Bank, atapewa at a high rate, but mimi nikienda nitapewa at a low rate. So we agree, Sadia, go and take that loan ya KCB. Na mimi nichukue ya Diamond Trust Bank. Then we exchange. So mimi nitashinda nikilipa juu KCB iko na mimi karibu. Nimebaki kulipa tu. Every month I'm going to pay. They don't know why I'm paying. Kumbe nilichukua loan hapa indirectly. So if investors realize that there are differences in terms of the rates that are being charged, they can take on behalf of each other and swap. So when investors can borrow the same currency at different rates, investors can borrow on behalf of each other in order to minimize interest expense. Tuko pamoja hapo na imeeleweka. So there is a reason why I want to go to KCB, because KCB is closer with me, but the problem is that they charge me more. It is closer with me, but they charge me more. Sadia also wants to go and take from Diamond Trust Bank, which is closer with her. But here akienda, wanamcharge mingi. So we say, okay, if that is the thing, let me take from Diamond Trust Bank, I give you, you take from KCB, you give me, then you ubaki ukifinance. So every time you run the business, hiyo pesa yenye umepata unalipa huko kwa hiyo account yangu because you are closer to that bank. Or we can agree on how to pay it. Instead of traveling, hustling to pay, we can do such a deal. So they can borrow on behalf of each other in order to minimize interest expense. So you can say in exam, you just say that this is where investors, after realizing that they can borrow same currency at different rates, they can actually borrow on behalf of each other. The next type of swap is called currency swap. So the first one is called plain vanilla. Now please understand that. Number two is called currency swap. That is those are types of swaps. So currency swap, I want to say that it is an agreement in which two parties exchange the principal amount It is an agreement. It is an agreement in which currency swap is an agreement in which two parties exchange the principal amount of a loan. An agreement in which two parties exchange the principal amount of loan and the interest in one currency for the principal and interest in another currency. Meaning that we are exchanging the equivalent principal of the same amount at a spot rate. We can be able to exchange. So the key thing here is that they are changing the principal, currency, the amount, not basically the rate, but the amount. So we go and take loan on behalf of another, I also take loan, and then we exchange. So I was saying that it is an agreement in which two parties exchange the principal amount of loan. An agreement in which two parties exchange the principal amount of a loan. Two parties exchange the principal amount of a loan. Then you say that principal amount of a loan and the interest in one currency and the interest of one currency for the principal. And vice versa. And vice versa. They exchange the amount. They exchange the principal amount of a loan and the interest in one currency for the principal and vice versa. Then you say that at the inception of the swap, the equivalent principal amount are exchanged at the spot rate. At the inception of a swap, at the inception of the swap, the equivalent principal amounts are exchanged. The equivalent principal amounts are exchanged at the spot rate. Let's look at the next one. It's called commodity swap. This one I'll explain. I say that at the inception, the principal amounts are exchanged at the spot rate. The principal amounts are exchanged at the spot rate. So that is also a swap. And then ingine inaitwa equity. Equity swap. Equity swap.
Mwalimu, what have you said on commodity swap?
I say that this is where you exchange goods for goods. This is where various commodities are traded. Like, for example, we have sugar, we have wheat, we have maize. So you sell to me some goods, I give you some. depending on the price of the underlying asset. So if I know that you are selling coffee at maybe 200 or whatever per bag, and I can sell diamond, whatever price, or any commodity that maybe oil, then we agree what is the value of oil, maybe some amount per barrel, and then also at the price this, then we see how do we exchange. So we are basically trading, exchanging. Like Uganda, I can agree with Kenya that we shall be giving you, maybe Kenya can give them coffee, they give us eggs. I just realized that even nanasi we exchange with them. So you swap. The main thing is the item that you're selling to them, they're giving you. And then you attach the price on those so that when you are trading, there is that balance of payment. So they agree to trade commodities depending on the value of the underlying, depending on the price of the underlying commodities. They exchange depending on the price of those underlying commodities. The other swap is called equity. So you say that it is an exchange of future cash flows. Equity swap is an exchange of future cash flows is an exchange of future cash flows between two parties that an exchange of future cash flows between two parties, an exchange of future cash flows between two parties that allows each party to diversify its income. An exchange of future cash flows between two parties that allows each party to diversify its income, for a specified period of time, while still holding its original assets. An exchange of future cash flows between two parties that allows each party to diversify its income, for a specified period of time while still holding its original asset. So what are the differences between swaps and options? Swaps, as you can see, people exchange. It is something that you do in black market. Unajua black market, Tony? Chini ya maji huku kando. You agree on man-to-man agreement or lady-to-lady agreement. That is what is called over-the-counter. When we talk about options, those are traded, they are traded in stock exchange. They are traded in stock exchange. When you read that question that I just gave you for December, they are saying that the value of shares, under that question, the value of its shares, the shares are traded in stock exchange. Swaps are agreement which is done locally, huku nje tu, arrangement between you. So the difference are that swaps are typically traded over the counter and are not standardized. It's just an agreement between you. Swaps are typically traded over the counter and are not standardized, whereas options are traded on exchange with a standardized terms such as strike price, expiry date, and premium. Those are the major differences. So last time when they were asking these guys, what are the differences between swaps? Any type of swap is a swap, and option, currency options, whatever option. The thing is that the options are traded in stock exchange, which is standardized with specified rates. I'm still explaining so that you use your own word. See, unaandika exactly what I'm saying. I'm saying, and I was actually in the middle of repetition. I'm saying that options are traded in stock exchange with standardized prices. They are traded in stock exchange with standardized prices. But swap are traded over the counter. They are not standardized. Swaps are traded over the counter and they are not standardized. Those are the differences. So, so swaps are traded over the counter. They are not standardized. When options are traded in the stock exchange, they are standardized. They have standardized terms. They have standardized terms, such as the strike price, expiry date, such as strike price and expiry date. Now, this equity is also called credit default swap. This equity is also called credit default swap. It's also called credit default swap. So I still have some 15 minutes. Now we've talked about options, but then we have real options. Those are options that we're talking about where they're imaginary. You agree on them in the market and agree on how to sell, the period you agreed on, expiry date, rates, whatever. Now, in investment, we have real options like ground. When somebody is telling you that, which options do you have? You want to invest, which options do you have? So you are asking yourself that I have two projects. One can run for 2 months or 2 years with this kind of revenue. But another one can give me this kind of revenue after 5 years. Initial costs are different. So you're wondering whether you should accept project A or project B. You are now bringing options inside the capital budgeting concept. Are we together? So options that are brought together with capital budgeting, where you are now wondering whether should I or should I not buy? You have two options. Should I or should I not buy? Those are now called real options. And under real options, there is an option to abandon. Let's say that umeanza shule. You are running the project for some time, then unaona mahali umefika mwisho, unasema I have an option. Should I proceed or I just abandon? Should I wait? Ni kama kucheza chess. You can hold and wait, you know. Ama maybe you want to start a project and you are saying that I think let me hold after election, I'll start. That is called option to defer. Option to defer. So there is option to abandon and then option to defer. So let's talk about real option. Then you look at the types of real option. Those are now real. Achana na hii ya Different from this one that we have just done, where you're talking about Black-Scholes. This one, Black-Scholes does not apply now. It is real option. Ile ya practical. Ile unaona tu like this is now what I do every day. Real option. I shared them. I'd shared the notes already. But I know some of you didn't get time to go through them. However, I don't mind. Open the notes that you have given. I've given you there. Just open the notes. Just open the notes on WhatsApp. The first attachment, I think I should, now that Rachel is saying that for sure, ni kama hata hajaijua iko. Let me forward. Let me forward. Lakini FM inakuanga tamu. FM inakuanga tamu saa zingine. I just don't know why you guys are not attending class as I expect. Unaingia class unapata watu kama 5 out of 20 ama 15. So look at what I've shared. The first attachment. I've just shared now the first attachment. Achana na hiyo. You are worried about pages. Instead of looking at the content here, page 1, relax. Relax. Here, page 1. Inasema, a real option is an economic valuable rights to make or else abandon some choices that is available for the managers of a company. So as a manager of the company, you have some choices that you need to make. Often concerning business projects or investment opportunities. It is referred to as real because it typically references projects involving tangible. It typically involves projects that are now real. That's why we call them real option. Sio kama hiyo is attached. Tangible, such as machinery, land, building, as well as inventory, instead of financial instrument. So the other one was financial instrument. Right now, this one is real. So key takeaways from this definition. Number 1, that a real option gives a firm's management the right, but not the obligation, to undertake certain business opportunities. That is real option. The other option was financial instrument. Was just a financial instrument, which is called derivative. Another takeaway from this is that real option refers to the projects involving tangible assets. The other one is that real option can include the decision to expand, to defer, to abandon, or to abandon a project. I've thought about those options. You can decide. The first option is to expand. Expand meaning, umeona biashara inafanya vizuri, umeamua kununua mingi, nasema ongeza. You are expanding your empire. That is an option to expand. There is option to wait. You can hold, which I say, it is also called defer. Wacha tumalize election kwanza. So that is something that we do every day. Wacha maandamano ishe. Wacha maneno ipoe. That is an option to wait or defer. We also have to abandon. Umechoka nayo nasema hii biashara haileti pesa. Wachana nayo. Now, these are the types of options that you have. Types of real options, not option, but types of real option. Remember, we had looked at types of option on the other side when we are looking at the put and call, and then we look at them in terms of flexibility. All right, you remember those ones? We talked about European option, we talked about Bermuda's option, we talked about the American option. In terms of flexibility, there are 2. All right, now these are real, these are not just option, they are real option. They are real option. So types of real option. So you need to really know what the examiner is asking, whether they're asking you for just a normal option or real option. We have the first one, investment timing option. Which kind of option is that? Which kind of option is that? Timing option. From what I've just explained about you. Where can it fall? An option to wait or defer. Timing, wacha ningoje, time value. So that is an option. It is from defer or wait option. That is called an investment timing option. The second one is called abandonment option. And I've explained that. The third one is called expansion or contraction. Expansion or contraction option. Then we have switching. Switching sasa ni kama unaachana na hiyo biashara, unasema instead of doing biashara hii, wacha niachane na hii nifanye hii. Si ati umeacha biashara kabisa. No, you're just switching from this to this. If you are doing maybe clothing, ulikuwa unauza nguo za wanaume, unasema hii wanaume they only buy once a year or maybe during Christmas. They only buy clothes a year. Lazima hii zeeke ndio wananunua ingine. So you switch. Lete nguo za madeni. Hao wananunua as long as wamepita wameona nguo wananunua, si ndio? So you can switch. You can switch. Because we are different. Then now it's called switching option. Switching or replacement option. Switching or replacement option. Now, iko na hesabu. Na because of time, sidhani kama tutamanage hesabu. Tutaanza kulala hapa na kesho ni job. I want you to go through the second attachment. The second attachment. They are basically having the same options. Option to delay, that is the one to defer. Defer, wait, or delay. Defer, wait, or delay. Defer, wait, or delay. We have abandonment, we have expansion, we have switching, or replacement. Now, expand hapo, abandon is there, and all that. So there is real option valuation. Look at the second attachment, real option valuation. How do you value real option? So real option valuation, how do you value them so that you can say that, I want you to understand, let's talk about abandonment so that you can understand the concept of valuation. Now, assuming that you have started, you've invested some money in a project. Unajiuliza, this project iko na running cost, si ukweli? There is money that you pump in at the initial capital, and then there is cost of maintaining this project. Na kuna revenue inaleta. So you now ask yourself, I have an option of stopping this project now, and I sell the scrap. Kama ni nyumba ulikuwa umejenga nyumba ya shule, you can decide after 2 years, you sell it. So there is revenue that you get from this project every year for the next 2 years, and then the final revenue or final income that you get when you sell it. That is the abandonment cost, right? Or replacement cost. You decide now, sell it, yende. So utapata pesa from the business, and then the final money that you get from the sale of that business, that is abandonment cost. Now, that is the first option. So utasema, maybe the total sale for the 2 years is 10 million, plus the one for abandonment is 50 million. So if I decide to get revenue for 2 years and then abandon it and sell it as scrap or the structure, I'll get a total of 60 M. Do you know that you can get NPV for this? And ask yourself, does it make sense? economic sense. You can get NPV for this. The same time, just like the one that we did in topic number 1, where you're getting the scrap values. So this will be like the scrap value, 50. Now, alternatively, you decide to run the project for the next 10 years. So 10 years, you can say that in the next 10 years, I'll be able to get maybe 5, this is 5 million every year. So you get 5 million times 10. And then you say that it will be 50 million. So when you compare 50 and 60, or let me just say, even this one, maybe it can run for 15 years, so you get 75 million. So unasema, if I proceed with this project for the next 15 years, mpaka the time inaisha, I'll get a total of 75 million. Lakini nikiuza saa hii, after 2 years, I'm going to get 60 million. So you have an option, whether to abandon or proceed. What will be the guiding factor here? Remember, the first 2 years are the same. The first 2 years, 10, whether you're going to abandon it or not, the first 2 years cancel each other. Utapata 10 hapa when you are abandoning and also when you are proceeding. The difference now comes from the 3rd year mpaka the 15th year. Mwaka ya 3, ya 4 mpaka mwisho. Hiyo pesa yenye unapata hapo, ukikompare na hii pesa ukiuza, are you gaining or you're losing? And then you now bring them back to your normal present value. Now, that is now where you're going to make the decision on whether to abandon or not. Sawa. But today I can't do that. If I do that, utaanza kushangaa. But I've given an explanation there. Illustration that we shall do. I've done it already. Nimekutumia hapo. You can go through it pole. Uelewe this type of illustration for the two. So kuna hiyo example 1, you'll be able to see what they are doing there, but we shall go through it. I can't miss without reminding you that this thing was set in some past paper. Sio hesabu peke yake. Even the theory, these types. Look at question number 2022 December, question number 1. 2022 December, question number 1. December 2022, question number 1. 6th December, Thursday, 6th December 2022, morning paper. Question number 1, it says, explain the term real estate, real option, as used in capital investment appraisal. And that was how much marks? 2. Just to explain the term real option as used. And of course, you have that definition on your notes. Hiyo notes nimekutumia hiyo notes. Hiyo ndio utaandika hapa. Hiyo point umeona hapo ndio utaandika hapa. Explain the term real option as used in capital investment appraisal. That's the first question. The second one, Roman 2. Evaluate 3 types of real estate, real option. Types of real option, 6 marks. Kwa hivyo ushapata kama 8. Unatafuta 42%. Sasa hapa, they have asked you to give 3. Lakini mimi nimekupea 4, 1 extra. 1 extra. Tuko salama? Is there any question ya option? Ya hesabu. An option to abandon or proceed. Sehemu nyingine. For the calculation one, look at September 2021. Andika mahali. September 2021. September 2021. They have brought to you September 21. They have brought to you a decision tree, lakini wameleta some elements of option. So you can be able to see December 2021 question number 3. December 2021 question number 3. After additional information, they are telling you that the expected net present value of the project that is required, the expected net present value